deal may be in the offing between the United States and South Africa over the African Growth and Opportunities Act. Now, the US, of course, had wanted to expel South Africa from AGOA because the latter had said there was absolutely no way they're going to let chicken imports from the United States to get in to South African territory. But now it seems that dispute is far from over. We'll be looking at that in a lot more detail and plenty more right here on Global Business Africa. I'm Ramanyang in the Kenyan capital, Nairobi. Here's what's coming up. Reprieve for radio listeners in Zimbabwe as the country issues 8 new licenses. And fuel shortages ease in Nigeria as the government reaches a deal with oil marketers. Now, the US and South Africa are close to a deal that would remove the last major obstacle to the renewal of a trade preference scheme for sub-Saharan African countries. About $25 billion worth of goods flow into the US every year through AGOA, the African Growth and Opportunity Act. But the US side is threatening to remove South Africa from membership of AGOA unless it stops blocking US chicken exports. Our Washington correspondent Daniel Renches has more.
About $1 billion of vehicles, including these BMW cars manufactured just outside Pretoria, are exported to the United States every year. A recent trade report says that without the benefits of the African Growth and Opportunity Act, these exports would have plunged by 92%. US lawmakers say they are hoping to vote soon on the renewal of the scheme, which expires at the end of this year.
You know, there's been all this talk for 24 months about a timely renewal of AGOA, and the time is now to do it.
But they've threatened to remove South Africa altogether because of a long-running dispute over chickens.
That's why if we can get the poultry issue resolved with the South African producers, I think we could see the extension go forward in the next several weeks.
The head of a South African government and industry delegation to Washington says he's hopeful that South Africa won't be left out in the cold.
We're pretty certain that we will find a compromise pretty soon. And we're not quite sure what the timeline is for AGOA, but we know it's pretty close. And so we're working to meet that deadline.
The US Chicken Council says differences are narrowing over the level of quotas and tariffs to unlock the South African market. As the delegation based here at the South African Embassy wraps up its extensive series of meetings in the US capital, it is now optimistic that these issues will no longer stand in the way of the successful renewal of AGOA. Daniel Renches, CCTV, Washington.
Elsewhere, Zimbabwe's government issued 8 new radio licenses as the Southern African country continues to open up its airwaves in a process it started during a 4-year coalition government. Now, the radio licenses are for commercial regional stations. One of them will be set up in Kariba, one of the remotest parts of the country. As Farai Makoto reports, the diversification of the country's airwaves will bring much-needed development in the sector.
For more than 3 decades, the only radio Zimbabweans listened to was on state radio. In 2011, CFM Stereo broke the state monopoly, becoming the country's first privately owned radio station. The CEO of the company that owns the station, which quickly has become the most popular here, says winning listeners from the government broadcaster was easy because people were tired of monotony and wanted variety. And now, even more choices on the way.
The more players, the better for any industry. I believe that perhaps what will be the initial effect could be more advertising that will come our way, we hope. We know that there's been a lot of talk about the economy not doing so well, but I actually believe that what it would do for the industry is to push more money into the industry because there are more players.
But there have been some controversies. AB Communications, which owns ZFM Stereo, has been given 2 more licenses, and another existing player, Star FM, part of a media group in which the government has a majority stake, has also been given an additional station.
As things stand right now, we are seeing the concentration of ownership in a few hands, which will lead to media monopolies, and monopolies and diversity are always enemies.
Media analysts say they would have wanted to see a more diverse distribution. However, the Broadcasting Authority, which issued the licenses on Tuesday, only received 12 applications and says those that were awarded were on merit. One of the new licensees will set up a station in Kariba, one of the remotest parts of the country, and says the opening of the airwaves will bring development and should be celebrated.
Kariba is one of those areas that are really in the armpit of the nation as far as broadcasting is concerned. They do not receive good signal for radio and television. So I think it brought a lot of excitement to the people of Kariba that there is a station that is coming to broadcast its own local news.
There's no doubt that ZFM Stereo has been a breath of fresh air for listeners here. And in the coming months, instead of being just restricted to 2 or 3 stations, Zimbabweans will have more choice. A step in the right direction for a country which for many years was stuck with just one option. Farai Mwakutuya, CCTV, Harare, Zimbabwe.
Nigeria's latest fuel crisis is nearly over. The country has been suffering from a petrol scarcity, but now major oil marketers have resumed supply after they reach an agreement with the government. The state, for its part, will now pay their subsidy claims and the difference in the cost of importation as a result of the devaluation of the naira. Deji Badmus has the details.
For about a week now, Nigeria has been battling a biting fuel scarcity after major oil marketers stopped importation over outstanding subsidy payments the government owes them. But after the latest round of meetings between the representatives of the marketers and the government, Nigerians can now heave a huge sigh of relief as the marketers say they have resumed supply.
We are discharging from our own end, and we are also having NMPC. For NMPC, we got about 40 million liters, and the lineup they have for us also gives the indication we'll get 100.5 million liters between now and Friday. So we want you to help us assure the Nigerian public that yes, there were some tightness, but the tougher days are over, and we will get back to normalcy pretty soon.
The agreement will see the marketers receive 30 billion naira as their foreign exchange differentials in addition to the subsidy payments.
So what we have on hand now that we owe is 185 billion. Of that amount, we are issuing sovereign debt notes, SDNs, which is the instrument with which we pay the marketers, to the tune of 100 billion. And so they are here. We've had a chance to talk to ourselves. So we will issue that shortly. They have actually been prepared by the DMO, and we have them here. So this is as good as money.
LCs that have been opened by the banks is over $500 million in 1 week. And $500 million in 1 week naturally will tell you that that's far, at least over 600 million liters of PMS, not even other product, of PMS that has been ordered. We would like to still appeal to all of you here, the marketers, and say that if there is any bank, I know they will not refuse or delay your LCs, but if there is anyone whose LCs are being delayed, feel free to reach us. You have our numbers, and we will appeal to them.
On the streets, the situation has indeed improved. The long queues of the past few days are fast disappearing. More filling stations are now open and selling.
It's better than last week. At least I'm the next to get fuel. But as at Monday, there was no queue, no filling station open to sell. But today is better.
Like millions of Nigerians, she would be hoping things stay this way for good. Deji Badmus, CCTV, Lagos, Nigeria.
Tullow Oil's exploration budget will not go back to a peak target of $1 billion, but spending could double from current levels starting next year, of course, if crude prices do go back up. African drilling projects are among the most expensive in the world, according to the company's executives, and many explorers are cutting spending, especially offshore, given the global dip in oil prices. Now, the oil and gas exploration firm said in January that it was writing off $2.3 billion worth of exploration costs on a number of its assets. It also cut its target exploration budget this year to just $200 million from $1 billion in 2014. Tullow's total planned capex this year is just $1.9 billion. 90% of that will be spent somewhere in Africa. Now, the focus for acquisitions will remain in areas where it already has a footprint, like the Gulf of Guinea, offshore West Africa and onshore East Africa. Now then, Chris Johnson reports from London tonight with a review of these developments right across the board. Chris, Tullow's CEO, let's start with some of his arguments. He argued earlier this week that there's a risk that exploration licenses already acquired in African states might not be utilized. Is there a perception, perhaps, among exploration companies that African governments are just asking for a bit too much in these production sharing agreements?
I think in answer to the second part of that question, certainly there is a real fear among exploration and production companies that they are paying too much for licenses that they may not eventually be able to use. But, you know, all companies are always going to complain about their input costs well ahead of production, particularly if they have projects that are going to last several years. So that's certainly a real factor. But the more substantive point here is that with oil prices having effectively halved or almost halved over the last 8 months, many of the fields in Africa and elsewhere in the world have break-even costs that are well above the realizable oil prices and gas prices when those hydrocarbons get to market. So of course that's putting a huge pressure on all the companies, and ultimately will have a pressure on those governments that are selling licenses. So going forward, yes, there will be a tussle, and I suspect that licenses will cost less in future.
Indeed. Chris, the EIA's most recent data shows that just 3% of Nigerian crude exports last year actually went over to the United States. 70% of it went over to European destinations or Asian markets. Now, given the reduction in demand in those two parts of the world, how is Nigeria responding?
Well, the short answer to that is not very well. The problem that Nigeria has is the problem that all the producers of light and relatively sweet crude oil around the world, but particularly in Africa and in near Asia, for example, are having, and that is that there is simply less demand. You know, Nigeria, for example, used to export well in excess of 1 million barrels per day of oil to the United States. That's almost completely dried up in the last year, and it's a factor that reflects the enormous increase in oil production in the United States, almost all of which is very, very good quality and has very low impurities such as sulfur, which is so it matches the Nigerian crude. Now, Nigeria and other producers such as Angola and indeed Libya and Algeria have, of course, they have other markets they can sell to. Europe, yes, you mentioned, in Asia, but those regions are not buying any more oil now from Africa than they were in the past. So the result, unfortunately, is a discounting, and we've seen a very substantial drop in asking prices, and the spot market has reflected that. So in the short term, the outlook for producers in Africa is fairly bleak, particularly if they're competing for the very, very top of the market for crude, which is the light, sweet crudes that are being produced in Nigeria. It's not very good news.
Indeed, not very good news all around. Finally, quick run through the U.S. markets here. Data from the U.S. Bureau of Economic Analysis indicating that investments in rigs and wells was up by 8.9% in the fourth quarter of last year. Now, has that trend remained in force so far in the first quarter?
No, it hasn't. We've seen a very substantial change in that trend. It took a long time, it takes a long time for companies to change their long-term investment outlook, but that has certainly happened in the last 3 quarters of the year. What we've seen is an enormous decline in rigs that are exploring and operating in North America, in North Dakota particularly, and in Texas. And we've seen, for example, I think the rig count has declined by more than 1/3 just since the beginning of December, and across North America today, the number of rigs operating in North America is the lowest we've seen for more than 4 years. So that hasn't continued, and that's a worldwide factor. It's not going to change in any short order unless we see a very substantial rise in prices.
Indeed, Chris Johnson there live from London. The oil route certainly does continue. Quick run through equity markets here for you. We're smack in the middle of reporting season in East Africa with regard to the NSE 20 share index. Rather ironic, therefore, that is the only one on the board today that's posting some red numbers. Some news coming out of Kenya, however, Mumia Sugar, first half losses widening quite a bit of a hit to about 2 billion shillings. That's roughly 22 or so million US dollars from a restated loss of 407 or so million shillings a little earlier on. Now, keep in mind, it does face quite a bit of competitive pressure coming through from the ending of COMESA safeguards as well. Congo has launched a new card-based system that's expected to make money transfer within the country a lot more secure. And we'll also be talking to Somalia's former Prime Minister on the country's efforts to align its financial system with the rest of the world. Welcome back to the program. You're still watching Global Business Africa from the Kenyan capital, Nairobi. Now, a new card-based money transfer system has been launched in the Republic of Congo. It essentially uses a post office as a transaction counter and is expected to make cash transfers in the country a lot more secure. Noel Makugu has that story for Grassroots tonight.
CLK Technologies, a company from Benin, recently launched the ChronoCash system in Congo's capital, Brazzaville. The system works with a post office counter as a transaction station and involves a prepaid card which, once activated, can be used to transfer money to another.
So this is how it works. You present yourself in the post office counter or in a window of mail partners. You ask for the map of face value or the amount you want to transfer. Added to this are the costs transfer, generally varying between 1 and 3%. At this moment, they activate your card because this card is valid when activated. When not activated, it's paper.
The launch has come at a time when there's a global shift in technology. With its simple features and ease of use, the system assures an easy and secure process.
The special feature in this transfer is that you do not have to do paperwork, no ID card to present. You have no additional constraints that come with your money and send it to the beneficiary who would appreciate you. On security, we put a point of honor. You cannot delete the ID and paperwork without anyone even steal a point of honor on safety. It's a completely secure product.
The ChronoCash project is not only a boost to digital money transfer, but also a facelift for post services in Congo, which had almost become obsolete due to the global technology shift.
The post is no longer a mold. It has become a counter-local services to help people. Today, all positions in the world you find lots of products. Originally, we wanted to offer mail financial services, but today we can no longer stay with the products on paper media. So we work with companies that have platforms to modernize our services.
Congo joins Togo, which adopted the ChronoCash money transfer system in 2011. Côte d'Ivoire, Benin and Burkina Faso are set to soon follow suit. Noel Makugu, CCTV.
Now, still on money transfer issues, Somalia is hoping it can regain its lifeblood, the flow of remittances from Somalis in the diaspora into the Horn of Africa nation. Remittance firms in the United States and Britain, where most of its diaspora reside, have effectively cut off operations with money transfer agencies in Somalia over suspicions that these could be used as conduits to finance terrorist groups like Al-Shabaab. CCTV's Beatrice Marshall earlier on spoke to the former Prime Minister of the country, Abdul Ali Sheikh Ahmed, over how this situation can and is being resolved.
There has been a link, though, that has been drawn between the remittances from the diaspora and the possible links to funding terrorist activities in Somalia and in the region. Is that a valid concern?
I don't think so. A number of studies have not concluded any evidence of a connection between organized terror funding and the diaspora remittances. We are talking about $100, $200 sent to families for their survival. So this is not a big amount. This is something that's directly benefiting the families. But, you know, the concern is there. The UK and the United States governments do not have sinister intentions, but it's one of security. We understand that, but we think it's a bit exaggerated now that people are understanding, more people are understanding, and stakeholders are getting involved. I think this perceptions will be cleared and the challenge will be open again.
But there is concern, though, that there aren't enough safeguards to ensure that that money does not fund any terrorism, though.
Well,
what is the Somali government doing about that?
The capacities of the transfer companies to use strict procedures and to comply with the requirements for anti-money laundering have been stepping up, have been improving, and we have been also able to pass legislations. When I was Prime Minister, we pushed through legislations that enhance the capabilities of the bank, of the central bank, to do some regulatory work to control any kind of misdoing, financial misdoing. So I'm confident that the system now is good enough to stop any ill intentions that may be planned through the remittances, and the Somalis are fully aware of that and conceive the problem, the potential problem that can cause to their lives and to their livelihoods.
Let's make a quick run through commodity prices here for you. Crude oil still essentially hovering around the $60 a barrel mark. Of importance, however, is Eskom. They're looking to, of course, raise some cash to plug that $17 or so billion financing gap that they are facing by apparently selling off some of their assets. No decision has been made on that, according to the CEO, Sediso Matona. He made those comments earlier on at the Reuters Africa Investment Summit, but certainly a story that we're keeping a very, very close eye on. We're in Lesotho next. The country is positioning itself as a leading producer of trout. Prepare to jump into the water shortly. Welcome back. Now, the Highlands Trout Project in Lesotho exports roughly 2,000 tons of rainbow trout every year. Most of that ends up in the hands of a major Japanese supermarket chain. Now, demand for the produce is high, and even bypassing Tsukuji, Tokyo's massive wholesale fish market, usually which is the first destination for quality fish imported to Japan. Tonight in Grassroots, we visit the mountain kingdom that's supplying Japan with some fairly high-quality sushi.
The idea of Japanese consumers eating sushi exported from a tiny African country with no coastline may sound improbable, but the Kingdom of Lesotho is doing just that. A mountainous country completely encircled by South Africa, Lesotho supplies water to its much bigger neighbour. Peering down at the blue waters of the Katse Dam from Lesotho's Green Mountains, a fish farm project is slowly growing. It hopes to boost the country's economy and meet demand for trout abroad. Selemo Setsane works as a nursery supervisor at Highlands Trout, a project that breeds the fish along the dam for export. The Highlands Trout project exports around 2,000 tons of fish a year to a Japanese supermarket.
After processing the fish, residents will be given the heads of the fish to eat. The people who work here are locals. The project has brought many changes and made things better for the community.
A Goldfields task team hit upon the idea of farming trout in 2007 as part of a South African government scheme to support development in countries that supply migrant labour. In the 1970s, around 70% of Lesotho households had men working as migrants in South Africa, the vast majority of them underground. But South Africa's gold industry is in a state of decline. Thousands of jobs have been lost, so the Highlands Trout project is a boost for the area.
In here, we make sure that we core them until they are about 12 grams. And when they are 12 grams, we transfer them to the nursery cages. We have to make sure that we test the water and make sure that the temperature and the oxygen is fine in terms of the fingerlings.
Grown to an optimal size of 2.5 to 2.8 kilograms, the fish are essentially fresh frozen, as within an hour of being scooped from the water and cleaned, they are put in a blast freezer. That's the start of roughly a month-long journey to Japan.
We have a good catchment area. We get low temperatures, and that's suitable for the growth of our product, which is rainbow trout. Also, pollution and other problems that you get with city life, you don't get them here. You don't get disturbances. The fish can live peacefully.
Highlands Trout has been exporting to Japan since 2012. It now hopes to expand its annual output to 10,000 tons a year. Voldy Karlse, CCTV.
Right, away from fish, let's talk about technology. After smartphones and wearable gadgets, those were widely believed to be the next growth spot for high-tech companies. More specialized products, however, were being showcased at the Mobile World Congress in Barcelona.
It may look harmless, but kids beware. Put this on and you may be followed. The Amigo smartwatch allows parents to track their children via GPS, triggering an alarm if the user strays from predefined safe zones like school. It's made by Barcelona-based Be On, operations manager Ishay Shani.
They know they're being tracked, but actually tracking is maybe a scary word. We try to create a design that is fun for the kids, and also we find that they like the communication.
Far from being just child's play, wearables is one of the headline acts at this year's Mobile World Congress. Big hitters like Huawei, LG and HTC have all unveiled flagship models that can field calls, texts and monitor sleep. Huawei's UK Director of Sales, Rhys Saunders, says the sector is approaching a watershed moment.
It's a market that's very untapped. It really hasn't kicked in at the moment, and there'll be a certain tipping point where smartwatches are exactly what people need.
This model can even hold a SIM card. Uswitch analyst Rob Kerr says it won't be long until the smartwatch replaces the smartphone.
They need to become more of a fashion accessory rather than technology focused. When that happens, people will start to want to wear them more, and within at least a couple of years, it'll be a choice between leaving your house with your phone or your watch, and your watch is more of an accessory, and that'll be your main device.
Wearable shipments are expected to jump by over 150% this year to 75 million devices. By 2018, it's expected to be 5 times that. Much of that could depend on Apple. The tech giant is launching its first smartwatch in a matter of weeks. Device makers here are hoping some of Apple's marketing magic will benefit them too.
Now let's speak about things that are also dragging others right along. The weakness in the South African rand that you're seeing on your screens right now, that's coming straight after the extra stimulus being announced by the ECB. Emerging market currencies, of course, are taking an absolute battering right across the board, regardless of wherever they are. That's it for this edition of the programme, however. Do send your feedback on the programme to globalbusinessafrica@cctv.com. And of course, when we're not on air, Facebook and Twitter are your ports of call. We'll see you in the next 23 hours. Have a profitable day. I'm Ramanyang.